Welcome back to Market Day Report. I'm Scott Shelly, otherwise known as the Cow Guy. And why don't we, let's not waste any time. Let's get to these markets because they've been all over the place this week. It's been an interesting one. How about that corn table? These prices brought to you by bar charts. Corn taking it on the chin a little bit here. We've got 540 last in September. That's about 10 lower on the day. Now it's 10 and a quarter lower today on 539 3/4. How about Dees? It's 539 and a quarter. We gave up that 540 level. We got to keep an eye on that. That's down 11.5 cents on the day. We've been as low as 536, but you know what? We've been 15 cents higher at 554. So that'll give you an idea about where we've been. How about soybeans? Soybeans 16 and 3/4 cents lower in Sep. Not good. $13.06 1/4 there. November down 16.5 cents at 13.03.5. We're about a penny and a quarter off the lows in November. Close to putting a 12 in front of this, so that's not good. We were hoping that 13.20 level was going to hold. We did some decent technical damage, chart damage yesterday, and this is what happens when that happens. How about wheat? Chicago wheat, especially this time of month. Chicago wheat's down 12 cents. It's in September at 715.5. December's off 12 1/4 at 730.5. So they're also having difficulties on the lows there as well in December. We've been 17 cents higher in Chicago wheat. Just to give you a little bit of a reference and some perspective, it doesn't really feel that good. 13 cents lower in Kansas City hard red wheat. That subcontract at 702.5. December contract there is at 715.5. That's down 12 3/4. So that's also on the lows. So we're on the lows in a lot of these products. Let's see what we have happening in Minneapolis. That spring wheat market, 9.16 last. We're about a penny and a half off the lows there in Sep. It's a penny lower. December is on the lows, though, 4 cents lower at $9.50. So, again, plumbing the depths here. Maybe we've got some help coming to the rescue. Todd Horowitz from Bubba Trading. Todd, come help us out here. What's going on? I know you're going to say it's August, and I agree with you. It is August. But we've also got some other stuff happening out there. What's concerning you the most?
Scott, actually, nothing's really concerning me. I think things still look okay. I mean, yes, there's a little bit of technical damage in the markets, but I can't give a lot of credence to what is happening because there's no action. There's no volume, and we get these, you get up 10, down 10, and soybeans had a rough day yesterday, which did break down a little bit. But overall, it's really hard to say that I want to jump in and do something here when I watch the overall markets. It's just very, very quiet. And I think that this is why, farmers should just always be protected and hedged. And if you're trading, it's a great time not to trade and observe the market because there's not much happening and they make their moves and then they're done.
If you're a bull, what do you think we need to see to kind of stem the tide here? I mean, we've still got this downward motion. It still feels kind of heavy, if you ask me, and maybe you would agree. But what do we need to stem the tide if you're a bull?
Well, I think you got to hold, $12.90, $13 in November. If not, you could see some ugly selling because we know how the programs kick in and they start triggering one sell after another, and they don't care. All they care about is a number and a price, and once that gets violated, you could see some heavy selling. Now, again, I don't know if we will violate that. I don't know if there's enough oomph to get it through there, but that would be my concern. Below $12.90, I'd be pretty concerned that there could be a pretty severe breakdown. But other than that, I think that we're really in pretty solid shape, especially in corn and in wheat. I mean, wheat is just getting some natural selling, so I'm not concerned at all at wheat.
All right. Well, that's great stuff. Thanks very much. We're going to go away, pay some bills. Todd, we'll be back with Todd Horowitz to talk livestock after these messages. Welcome back to Market Day Report. Thank you for being with us. Getting close to being in that last hour of trade. It's not how we open, it's how we close. And it's also going to be a weekly close, so we want to make sure that we're on top of that for you, and I will definitely be doing that. How about live cattle? Let's jump right in and waste no more time. 67 cents better. Oh, so how about 60 cents better in October at 128.75? We've got December up 22 cents at 134.20, and we've got February, drum roll please, sharply unchanged, 137.90 in that Feb live cattle market. How about feeder cattle? Let's take a look at that table brought to us by Bar Chart. This looks a little bit better, right? Doesn't it? September's up $1.10 at 164 even. We've got October up 77 cents at 166.25. Moving right along to lean hogs. At lean hog market, this is probably the best table on of the day for us. October's up $2.37 at 89.30. We're up $1.82 in the December contract at 82.37. So good gains over there. Todd Horowitz is with us from Bubba Trading. He's joining us from Chicago in his palatial manner, by the way. Todd, what do you see with the livestock and cattle, or the cattle and lean hogs? Anything we need to be kind of keeping an eye on over there?
No, I think they're going to continue to work higher, Scott. I think when you look at the overall conditions, and you look what's coming forward into the fall here, I think we're in really good shape. And again, I think the demand is going to pick up mightily here, especially when we start consuming more food. I mean, you know, again, we're going to have a couple of million people a week going to games, which is a big deal. It's a lot of consumption on top of the groceries. So I think we're in really good shape here, you know, in general. Hogs are a little bit shaky. You know, they've been pretty wild, flipping back and forth. But today's rally is nice, and if they can get back over 90, I think we look good across the board.
You know, I haven't asked this from you in a while. We used to talk about this all the time when we saw each other more. What's your feeling about the overall economy in general?
I think the overall economy is in trouble myself. I mean, again, it doesn't matter right now because everybody thinks it's better.
I agree with you.
Sorry. I mean, well, you know, you're only pumping in the money supply, which is giving you imaginary capital, but it's really not going any farther. That's the issue, and that's this whole thing with the stimulus and the Fed. I mean, this is why the Fed needs to step up and really just taper, let the markets take their beating, because interest rates should be higher, and they could be higher.
And and that's the problem, though, Todd, is what I see, is because I agree with you. There's more fat in the system when we have interest rates higher. But the problem is, for that 10-year yield that we're all looking at around 1.25, I don't know what it is exactly right this moment, but you've got the 10-year yield in France and Germany still at a negative, right? So if you borrow 10 grand, you only have to pay back 9,990. I mean, that's the world we're living in. So I'm going to have you back, and we're going to talk about more of that, because I think there's some great discussions to be had there. But the other great discussion that needs to be had now is with Tammy. I'll hand it back over.